Hello, folks. Welcome along to another one of CARA TV's episodes. This one, we've got Mike Snape from Bennet Brooks, an accountancy practice, who are kind of national wide. They have multiple offices around the UK. I'm going to quickly go into this and just kind of introduce Mike. So, believe it or not, accountancy is not his focus. Holidays and music plus gardening. I mean, he's a rock and roller and he loves nothing better than a good rhododendron.
Oh, the truth is out there, Rob.
Well, I'm going to put some quizzes to you later on, some music quizzes if we get time right at the very end. But Mike, as I said, you're head of small business at Bennet Brooks at the head office in Northwich. You're qualified with an FCCA and an FMAAT. Could you explain what those are for the viewers, please?
I can indeed. Yeah, they were qualifications I did probably longer ago than I care to admit to. First one I actually did was the FMAAT, which is the Association of Accounting Technicians. I qualified with them way back in about 92, 93. So the initials actually stand for Fellow Member of Association of Accounting Technicians. And the FCCA is what I then went on to in my professional exams, which was the Chartered Certified Association, the ACCA, and I'm a fellow member of that, so hence Fellow of the Chartered Certified Accountants.
Right, okay. And is this one of those qualifications that you have to do regular exams on to keep it going, or was this I passed it a decade ago and can still use it?
We have to do the exams to qualify and show the level of technical competence needed to qualify. But then post-qualification, yes, it's not exams, thankfully. I'm glad those days are long gone. But there is still plenty of continuing professional development that we have to maintain to maintain that competence and prove to our associations and institutes that we're capable of doing what we're doing. And again, one thing we will talk about going forward is how things change so quickly in the accounting and tax world. And it's a big part of what we do, having to keep on top of that and then interpreting those rules and passing them on to our clients.
And one of the reasons why I've got you on camera today, one of the rules that was going to change, but I believe they've postponed it, is making tax digital, for the smaller businesses that haven't had to do it before. But unfortunately, the digital world that we now live in, it's coming to them. So I know it's being postponed, but can you explain to me what the difference is between the old tax way and the new making tax digital way?
Absolutely. The digital world will get us in any which way these days, and accounting and tax is absolutely no different. And actually we've been within the realms of tax being within the digital forum for some time. I mean, payroll came within the remit probably about 10 years ago, and VAT's been there for the last few years as well. And as part of the whole rationalisation of the tax system and trying to make us at the forefront of the digital world for tax, it's being rolled out to everything else. So companies and partnerships will end up there eventually. But individuals, and I'll refer to individuals rather than businesses because it does catch individuals. Individuals were due to come under for making tax digital for income tax self-assessment from next April. And I suppose our camouflaged Christmas present was a little bit the notification a week before Christmas that actually it was going to be postponed to 2026. But the new rules and the new considerations that are being put into place are actually going to change the initial thoughts somewhat. Originally, it was going to affect those taxpayers who were self-employed as sole traders and property landlords who had gross income of more than £10,000 in a tax year.
This is not like a sole trader that's limited. This is even if they're not limited, they have to do it.
A limited company is a separate legal entity. So companies will eventually fall under making tax digital, but we think that's some way off in the future. Originally, I think they were banding around 2027 or 2028 when they were looking at dealing with sole traders from 2024. But again, with that now being postponed till 2026, it could be even further in the future. But individuals will fall foul. I'll say fall foul because it is going to be quite an onerous system potentially to those who aren't of a digital mindset. So this 10,000 that was originally mooted and was going to affect quite a large number of taxpayers from next April has been uplifted to 50,000 for the first year of making tax digital for income tax self-assessment. So from 2026, it will only be those taxpayers, either as individuals, self-employed people, or or with property income that takes them over that £50,000.
So sorry, you said 10,000 earlier. So the making tax digital, is that targeting businesses between £10,000 to £50,000 earning?
No, it will be initially it will be those over the 50,000.
Right. Okay.
So any sole trader or property landlord with combined self-employment income or rental income of more than £50,000 a year will be affected. The idea then will be that the next banding comes in from April 2027, and that will be for those sole traders and those property landlords whose gross income is between £30,000 and £50,000. And then beyond that, we don't know. There are going to be more consultations by the revenue, and 3 years is a long time in tax and politics, Rob. So anything can change, as it quite frequently does. So we're kind of waiting with bated breath to some degree to find out what will actually happen from 2026. I mean, we all thought 2024 was going to be a goer. There was so much money and time had been pumped into the whole system, and I must admit, I do feel for some of those smaller software developers who've actually put a lot of research and development into their accounting programs that would have been able to deal with making tax digital, who are now going to have to potentially defer its full implementation for another couple of years. But that's not to say it's not of benefit to those people it will affect right now.
Okay, so the threshold that we're looking at is it's 50,000 plus. 2026 April is the deadline for making, or the new deadline for making tax digital. What can businesses do to prepare themselves if they're not ready for it now, before we get to 2026? Because I know it's only 3 years away, but that will go quickly.
It will, and it was surprising how quickly we got to March 2023, knowing full well previously that the integration was going to come in from April 2024. And I can quite openly say this as an accountant. I don't think it's a case of go out and study all those software packages that are out there and all what the legislation is actually saying about making tax digital. I would say we're probably in the same position we were a couple of years ago, knowing that making tax digital's on the horizon. I will say this as an accountant, I would say go and speak to your accountant, because there are a number of different routes that can be followed, and it's all those anecdotal remarks about experiences of using different pieces of software. And every business, like every person, is different, and there'll be those little nuances that make the decision making process that little bit more intricate.
So let's
that background.
Let's say that at the moment, you're a small business. Well, I say small business, you're turning over more than 50,000. You're using a bit of an archaic software, you love it, and you're scared of change, but change is coming. With all the new platforms that are out there, QuickBooks, Xero, all those, if you're on one that isn't going to fit the regulations, who would you suggest that they should go and use and upgrade to?
Well, we all have our preferences, and I know as a practice we tend to veer in a particular direction. But again, it's having that conversation to actually find out what works best for you. Because I mean, you would say the usual suspects that are out there are Xero, Sage, and QuickBooks, and they will suit the majority of businesses out there. Again, some of the terminology maybe is a bit more geared towards people from a financial background. So actually, somebody from a non-financial background might find it difficult to relate to some of the pieces of software. I'm not going to focus on any particular one or kind of gripe about any, because they're all very capable pieces of software. The degree of user friendliness is different again. Some are more open to using third-party apps within their software as well. So for instance, if you need to, once you migrate to one of these pieces of software, if you actually want to make use of other ancillary pieces of software, so perhaps stock control or payroll or e-commerce products to enable sales to be integrated within the software, then actually they all have the different degrees of usability and flexibility as well. So again, it's having those conversations to actually determine what is the ultimate goal. It's not just about being compliant, it's about doing what's right for your business.
I think you've got it there on the head. Is all the different industries, all the different sectors that we work in, go and talk to your accountant, because not one package fits all, and then have a look at the integrations that you may require and find a suitable package that's got the integrations that work in your industry. But the first thing is obviously have a conversation with your accountant.
And one of the things that we've become very much aware of over the last 12 to 18 months is that there are a lot of smaller developers out there who are offering, whilst maybe slightly more basic versions of accounting software, they ultimately do the same thing, but maybe are more cost effective. We've also seen products that are targeted towards particular industries as well, and as well as industries, we've seen bespoke pieces of software coming out for property landlords. I think property landlords are probably one of those areas that have been largely overlooked in all this as well, because it's all well and good talking about your Sages, your QuickBooks and your Xeros, and they're very much targeted, even though that they can be flexed, they're very much targeted to small trading businesses, whereas property landlords are a different kettle of fish, and equally will need to manage their portfolio and their record of income and expenditure in a different way. And so we're finding these pieces of software that are coming to market that are geared specifically towards them, and again might be the ideal solution as opposed to taking one of the more mainstream packages.
And I suppose another thing as well with all these packages that are out there and making tax digital, we're going to see a great reduction in the kind of getting your tax done in January. Because I know January is typically rather busy for you guys. Do you think that will be a thing of the past as people get to do it on a monthly basis rather than waiting for the end of the year?
Certainly hope so. I mean, January is one of those months that seems to pass most accountants by, unfortunately. And that's why I kind of said that it was the camouflage Christmas present, the announcement that they'd postponed making tax digital for a couple of years, because actually it will make it will put the onus back on the taxpayer. And what it will do is that for those individuals that are having to file these quarterly returns, because that's ultimately what the Making Tax Digital system will involve, it'll be making these quarterly returns of income and expenditure to revenue and customs. By having that information available and filed quarterly, because you'll just get a few weeks from the end of each filing period end to actually get those returns filed. It means that you get to the end of your financial year, most of your information is there and will just be completed by what essentially was the tax return. You'll now have this end of period return that will put in all the other accounting adjustments that you'd normally put within a tax return. and then get that filed by the following 31st of January. So actually, when we're chasing clients in January for their books and records, if they've all been filing under Making Tax Digital, that information will have been, for the most part, available from the previous 5th of April. So fingers crossed, yeah, we're hoping it will make a big difference and get rid of that bottleneck that we normally get in December and January.
Sounds like it's going to make your lives a lot easier, and maybe you can celebrate Christmas a bit better, not knowing that January is not going to be so taxing. Sorry, I had to get that pun in there.
Well, let's hope so, but you're never quite sure in this world. Something's bound to change between now and 2026, so we will see.
So talking about what's coming, preparing for 2026, could you give me 2 or 3 key areas that businesses that may have a bad habit now but need to change that habit to be ready for the 26 turn on?
There's a few things. We've got the basis period reform, which, without trying to sound overly technical, will basically realign everybody's accounting year end to follow the tax year. So those people at the moment with 31st of July, 31st of August, 30th of September year ends and the like will end up having to flex that system. But that's a topic for another day. That's another quite in-depth conversation. But that's very much on the horizon. But things are forever changing in accounts and certainly in the tax world as well, Rob. So, and I know I can say this as an accountant, you might say I'm feathering my own nest, but ultimately it's having those conversations, because conversation we might have today about accounts and tax might be completely redundant in another 6 to 12 months. And advice I've given to clients in the past, it will always have to be caveated with, make sure if you actually come to enforce what I'm telling you, come back to me to make sure nothing has changed.
It's still relevant.
Yes, and you look at the back end of 2022. We had 3 budgets in relatively quick succession, and we saw how quick and easy it was then to actually change what the tax rules would be. And we've got another budget coming imminently as well, which again will change things going forward. So easy for me to say, but I would always say maintain that relationship with your accountant, have those conversations and see what happens. And equally, not just find out what's going on out there in terms of tax, but in terms of what reliefs are available for you to claim. I know we've spoken previously about the super deduction, and we've got just over a fortnight now. So for those limited companies looking at making capital expenditure, there's an extra.
Spend your money now.
It is, absolutely, and that is a one-time fix. And once we get past the 31st of March, that will be done and dusted. So for those looking at imminent expenditure, certainly get it in before the 31st of March. Got to be new plant and machinery, equipment. But if
new expenses, and only for a business asset, not stock to buy and sell.
Absolutely, yeah.
Okay, so any other secrets that you can share with, just between you and me and a few viewers, on how or why Bennet Brooks are an accountancy firm that if you're not getting the right service, they should be coming to look at you?
I think for any good firm of accountants, it needs to be that holistic approach, to be honest. And I'm not just singing the praises of Bennet Brooks. I'm talking about any good firm of accountants. They should be maintaining that level of communication with you, and that is a two-way street. I've got clients who I don't see from year to year and through their choice, and are quite happily carrying on in the same vein year in, year out. But actually, what I find sort of offering that holistic approach is certainly for the likes of limited companies, where we're advising the company in its trade, but we're also giving the advice to those directors and shareholders who are invested in the company. It's making sure it's all set up in the most tax efficient manner. And to be able to do that, you need to understand your clients, know who they are, what they do, what other sources of income they may have, and equally what their aspirations are.
Yeah.
Some clients want to build their businesses as quickly as they can with an intention for a relatively quick sale, so to get it as big as they can, and then they know they're going to move out. Some know that actually what they're doing now is the career that will take them through to retirement. So it's actually making sure what they're doing is sustainable from a financial point of view, but then also planning that exit strategy when that time comes as well. And in all cases, making sure it's done in a way that fits comfortably with the client, but is also as tax efficient for them as well. So what's right for a limited company might not be necessarily right for the directors and shareholders. So you know, it's making sure that it's a complete holistic approach to what they're doing, and maintaining that conversation to see when circumstances do change.
I was just going to say, I think you picked it up again right at the very beginning. Communication is key, and it's not a one-way thing, it's a two-way thing. And just keeping, if you've got the right communication, you've got the right relationships. So you know, to those that are out there thinking, actually this is great advice, if your accountant's not giving you that advice, then you know, hook up with at Mike at Bennet Brooks, and he'll help you out. As you know, there are a number of other accountants out there. So Mike, we're coming towards the end. Music wise, I'm going to mention two bands, and I want you to name a financially related music track to the band. First one's dead easy, Dire Straits.
Money for Nothing.
Right.
Got to be.
Simply Red.
Money's Too Tight to Mention.
See, you're on it. You're absolutely on it. I'm not. I know you're a huge rock fan, a music fan, so we could talk for hours on this. But I think you know, we will pick up a couple of other videos later on and go into some of the other topics that you said were deeper. But for now, Mike, what's the easiest way that people can find out and contact you if they need to?
Find me on LinkedIn, find me on our Bennet Brooks website, www.bennetbrooks.co.uk, or at the other end of the phone line. Always happy to talk to any potential new client.
There you go. There you go, folks. So if you want some free advice, give Mike a call. He's given you the website. The website is also down in the links. So again, Mike, thank you very much for being on camera today. It's been a real pleasure. Obviously, it's digital, so I love it. It's tax, I hate it. So yin yang. But yeah, those that have enjoyed this, please make sure you subscribe to the channels and watch out for some more episodes with some other people. Thanks a lot. Cheers. Thanks, Mike.
Good job. Thank you.